Hey fam, last week we saw some token launches like Rave, which raised to astronomical levels, liquidating all shorters and just dumped in one single candle. Lab, which was airdropped to many people, also followed the same fate. While all of these were happening in Binance, one token stood out. That was MegaETH. On April 30th, finally, after such a long wait, they had their revered TGE happen, and we saw how it launched at 2 billion FDV. Sounds very good, right? And the crypto Twitter is all berserk over this launch, and there are so many things happening around MegaETH which I felt should be covered as a separate segment. So welcome to this episode where we just cover about MegaETH, its tokenomics, its day apps, and much more. Welcome back to Block Talk.
I will fire Gary.
Hey Vaishnav, welcome
Hey,
back.
Kumar. Yeah.
So big news for this week. So we have this MegaETH that's doing a lot of rounds, right? So let's start from the beginning. What is the problem that MegaETH is trying to solve?
Okay, so MegaETH is trying to solve what was a problem for Ethereum, like congestion, there was low space for transactions to happen, and you know, right, Ethereum had huge gas prices 2-3 years before. So MegaETH is also an L2 trying to solve these kind of problems, and that's their main goal. But Ethereum at current stage, after all those scaling upgrades and
Multiple upgrades
yes,
over the years.
Fusaka was there, Amsterdam. After those, the gas price has cheapened out a lot, and Vitalik himself tweeted out that L2s are not needed now. Ethereum itself is at that level. So MegaETH in this state of blockchain enters the market. So let's see.
So even if the prices have reduced drastically, still it did not make sense to do a practical day-to-day transactions on Ethereum. So MegaETH is kind of trying to solve that.
Yes,
that does
and not just scaling issues, like there are so many L2s trying to solve scaling and gas fees, but MegaETH also has some laser focus goals to achieve. They want almost sub-second blocks, 10 millisecond blocks.
That's quite fast.
And that should also get confirmed as soon as possible.
Right.
Because even if you have a faster blockchain, and transaction can be told as secured or confirmed when the transactions are bundled and posted into Ethereum.
Right. Of course, people don't really want to see that confirmation 1, 2, 3.
Yeah,
right?
yes.
They just send it. I mean, within a few seconds, blink of an eye at least, like a couple of eye blinks, it's done, right?
Yeah.
That's when a transaction is fully complete.
Yes.
When it's stuck in between, still there's a ambiguity. Is this going to go through? Is it going to get, get cancelled out?
Yes.
You never know. I mean, that transaction speed is something that has caught my attention. So that's one big thing that's happening here. So let's also discuss on the funding. How do you actually build something that fast, right? And what is the architectural choices that make it work?
Yeah. So architectural wise, at first, they have some massive upgrades. If you take normal L2s, let's say for example Base. Base has a set of sequencers and set of validators. So sequencers are the nodes which collect transactions and sequence in a way. They are block builders, you can say. They build the blocks and give it to validators. Validators are who run through all the transactions if they are valid or not and sign it up. Here, MegaETH has introduced a single sequencer method. So
could you explain it in depth?
Yes, so single sequencer is in the sense, so even if you take Polygon, Base, everybody has a set of sequences. There are 4-5 nodes across the globe collecting your transactions, and there will be some time difference in consensus between those guys, right? Even if let's say in a conference room we are 5 people who need to be sync at the same time, there will be some time difference while you transfer data from one member to other.
Right.
By having a single sequencer, the delay is 0.
Okay, so latency is there everywhere. So they're
Yeah.
trying to get the latency down so that
Even
everyone
down.
is okay.
But having a single sequencer also begs the question, then where is decentralization? Everything passes through the single node.
Right.
For this, the answer is maybe the transactions for speed may be going via single sequencer, but the final transaction lands on Ethereum because this is an L2.
Okay.
So they borrow security from L1.
So they're just trying to get a small catalyst in between so that it just speeds up.
Yeah.
And at the end of the day, still the reconciliation, all the records are being kept on the network, main network itself. Okay, that's quite interesting. But also, these kind of interesting topics also gets me a little intrigued about the fundraising, right? When I see that they have raised like a big round of fund. Over 100 million has been raised. So can you walk me through every round? Because the way they've raised money is almost as interesting as the claim itself, right?
Yeah. So they had 4 distinct rounds, each structurally different from the last. Let's cover up that. So first was the seed round on June 2024.
20 million.
Yes. By Dragonfly Capital, Vitalik Buterin, and those kind of big names were on the list. Next was the Echo round. Echo round was a public round where you can register on Echo. This happened on December 2024, 10 million raised.
Okay.
And the deal over here was $0.02 per token, and 20% would be launched at TG, 80% would be vested.
Okay, 80% vested, 20%?
Launch at TG. That was
Okay.
the deal
Okay.
for Echo round participants.
Okay.
Then there was Fluffle NFT sale. So MegaETH had an NFT sale of their own collection. But when you buy whatever funds is used to buy the NFT, right? That funds are sent to MegaETH's foundation itself.
Okay.
So it was nicknamed as Fluffle NFT sale. February 2025, they raised around 27 to 28 million dollars. Each NFT was sold for 1 Ethereum each,
Okay.
which is soul bound. You can't sell those NFTs in aftermarket. Whoever buys it, it sits in their wallet forever.
Okay.
And for these guys, the deal was 50% unlock at TG, and rest of the 50% vested over 6 months.
Okay, so they just don't dump it to the market.
Yes.
Okay.
Then the final round was Sonar ICO.
Okay.
Sonar
That's
ICO,
what made it big.
yeah,
Uh-huh.
it was so in trend. Even I got inside the sale.
Okay.
So
That's when you just kind of. That's when they start to make rounds in the news. There's something big happening.
yeah, in crypto, Twitter, and everywhere. People were very enthusiastic to join in the round, and the minimum investment was itself around $3,200, and the max you can go is over 100K.
Okay.
And here the deal was juicy, like same price as Echo round, which happened in December. December 2024, the
Right.
price was 0.02.
Right.
Same price we got in
At the same valuations they were
yes,
giving at this.
October 2025.
Right.
Even cheaper, like we
Right.
got tokens at 0.019999
Got it.
kind of.
That's a little this thing. Now let's get into that. I mean, they've raised
one.
almost more than $100 million. It's a big overall, like the
Yeah, yeah,
accumulation of it. So can you just break down a little bit more down on this mega token, right? Like the supply valuations, where what goes, right? What all, where all does it go?
Okay, so let's break down the tokenomics of the same. So the total supply of Mega is being earmarked at 10 billion Mega tokens. The FDV at launch was $2 billion, as we saw on 30th April.
Right.
Current FDV, like as we speak, is floating around 1.2 to 1.5 billion dollars.
Right, it's come down.
Yes, and if you take the circulating supply, the market cap is around 140 to 170 million dollars.
Pretty good itself.
Yes.
Yeah.
So this is like a classic high FDV, low supply for now, because 140 million dollars worth of circulating supply, in comparison with the 10 billion mega project, the ratio is too skewed.
Yeah, it's too. I mean, it's just not even like single percentage.
Yeah,
in the
most
open
of
market.
the tokens are logged in
Right.
those sale and vesting schedules, and how this would get distributed is also interesting, which we cover in the later segments.
Later segments.
Yeah.
Okay.
And if you see the sale wise percentages, 14 to 15% is being held by VC or investors.
Okay.
9 to 10% is with team and advisors. 7 to 8% is with foundation. And in sale, they got 5% for Sonar, Echo got 5%, Fluffle 2.5, and bonus 2.5.
Okay.
So this is how the tokens has been distributed. You can see the chart on the screen.
Right. No, as I see the data, what is being shared with me, I mean, everything, it looks fair. The distribution looks fair. Again, 10 billion is the total supply, and again, 140. I mean, it's a big number where you have to. It's a good number to trade again.
It's a very good.
It's a good number to trade on a day-to-day basis. But let's see where this goes again. As you said, we're going to discuss about this in a later part. So I also want to understand how the launch actually went, right? You know, like with all the hype, all that, so much of money. How did the TG actually play out? And was there any drama?
Yeah. So I was very closely watching the launch of Mega because I'm a direct investor into it. So what happened was, after October, the planned TG was on January 2026 itself. But because the market's conditions were not so good, they pushed it across. And how it was pushed across was, they did not fix any date. They said, we will have some KPIs, key performance indicators. So they needed at least 10 apps to hit a certain volume on chain.
Okay.
When that happens, TG would happen.
Okay. So and token generation event was a big thing, right?
Yeah, it was tied with KPI of the chain itself. There was no fixed date from the foundation and all. It was like, if chain gets usage, TG would follow.
Okay.
And if you see other chains, when chain's mainnet launches, token also is generated on the same day, right?
Yeah.
99% of the projects.
Mostly. Yeah.
But for MegaETH, chain was launched way too early. But their own token TG is now. So chain was even live before with Ethereum as gas token. That was one thing. So this was how everyone was ready for the launch day. And there also, what kind of drama we are talking about here is, after October sale on November, December, the pre-markets were telling that Mega would launch at $5 to $6 billion pre-market valuation. Like, we were having dreams that 3x to 5x is easy.
It's possible. In the crypto space, that is possible. Yeah?
So that kind of time was there last year. But this year, they somehow managed to bring it to at least 2 billion market cap, which is 2x for public sale participants. Which is also very good.
Very good. I mean, with considering the current market scenario, that's a very good valuation again.
And after launch day, they could not sustain that price much. Within a week, it has come to the token price is around 0.1213. And if you take the data, 60% of the sale participants had sold their holdings on the very first day. And rest of the 40% are only holding it.
Okay. These are considered the long-term investors.
Yes.
Okay. So I also want a little bit information on this, like the Flux, the emission systems, right? Just 53% of the tokens go to the staking rewards. That's the biggest slice of the pie, right? I mean, 50% is like more than half of it.
Yeah.
And does the Flux system actually work, and why does it matter?
Yeah. So as you can see on the screen, Flux is a protocol where MegaETH has logged all their emission tokens, not behind a time-based system, but KPI-based system.
Okay.
So if you take other projects,
what does that mean?
Yeah.
To average investors or?
So if you take other normal projects, they will have vesting schedules, time-based in the sense they will see after 1 month 10% will be released, after the next month 5% will be released.
In a very staggered way.
Yeah, or there will be linear way, they can have stepped way, so there are multiple graphs.
Right.
But everybody follows time-based. MegaETH what they have done is, they have 12 KPIs. Each KPI denoting the ecosystem's growth as whole. So stablecoin supply inside the chain, security of the chain, how long Ethereum has lasted, how many apps they have processed, the gas fees they have processed. So these kind of metrics tell the health of the chain. So whenever the chain hits particular milestones, a chunk of Mega gets unlocked with whoever staked inside the Flux system.
I mean, that's clearly even documented and well put to the out to the public, right? At what level, how much is going to be released, how much is going to be vested stocks would not be, it's going to be available for trading, right? Again, is there anything specific that you want to tell about this?
And there was one specific thing which I wanted to notice. People may have some doubts, like if you take previous projects like LuxRare or Celestia, they also had very similar staking systems. But the caveat over there was, even if you are a founder or VC with locked tokens, you can stake those locked tokens to get unlocked rewards. So your locked stake gave you some liquidity, and public did not like it much because foundations and VCs have the huge percentage. So rewards get diluted towards them, right? MegaETH has ensured that if you have locked your investment, let's say for an year under a vesting schedule, and use that Mega to invest in Flux, the rewards you get will also be vested in the same time frame.
So let's again move to a little, because of the speed, right? You said the speed of transactions is very helpful for gaming industries and everything. So let's specifically talk about this gaming, right? How MegaETH can be used in the gaming sector. So gaming is a big pitch of them, right? They've been talking about gaming for a very long time. What actually goes live on chain right now? Is there something into gaming? Because they said that is a big pitch, right? That's what they're saying, that MegaETH is more usable. I mean, more usable on a gaming platform. Applications.
So focusing on gaming gets its own pros and cons, but we will first see what kind of games and dApps are live on chain, and which I have used as use.
But that's what they're going to go live first.
They have already. Every app which I'm mentioning is already live. So I have also used them just to test out, as you can see on screen. So the first one is Hit.One, which is like a hyper gamble platform, you can say. So you can roll a dice, and they select your commodity, leverage per leverage.
That's very interesting. 666 ETH leverage. I don't know why they're specific about 666 though.
So how that's funny in a way, because in Hit.One you can't take what asset you want to long or short, the leverage multiplier. The asset multiplier and the direction is taken by chance. You just have to roll it, the system will lock. Let's say Ethereum into 400 long. Then you can only exit when if you are in profits or you get liquidated.
So this is on the perpetual side, right?
This is on perpetual gamified side. And actual DEX they have built is Worldmarket. Worldmarket is a DEX like any other which you can see on chain, on other chains. But one small point which got my eyes on it was this markets DEX. Worldmarkets does not have any backend or indexer. Like if you log into their website, your browser directly talks with the blockchain via an RPC. So it's like almost on chain as it can be, without any risk, without any data risk or Oracle risk. That point I really liked about Worldmarkets. And there is also Rocksolid, which is USDM vault, USDC and USDM vault, where you can handle your stablecoins for yields. And there is Showdown, which is like a poker game.
That's a game part.
It's a poker game with special powers. And what I feel is, here being a different blockchain itself, being a separate blockchain app, you need a mix of consumer apps on your chain, not just gaming. But if you see
The real-time usage of it.
their DApps and all, the prep dexes are really low, which are super usable or which has been super famous among the crypto users. Their games are only running really well.
Okay.
So this can bring initial traction, but as time goes on, they should have some blockbuster app which is also serious.
Okay.
That's what I feel. And the gaming thesis is the main user acquisition.
Okay. That's a strong point right now.
Yeah, right now. But after that, we also need some core apps to sustain those users.
That's what, see, the chain's TVLs, right? The numbers looks very impressive right from the launch. So what is actually driving them? Is it just the games or is there something else that is driving this?
Okay, so on the behind, there is one huge strategy going on. As you can see on the screen, I saw a Twitter user calling that strategy as Megaavethena, like Megaavethena together. So there are three parties over here: Mega, the chain; Aave, the consumer DeFi lending platform; and Ethena, the stablecoin issuer. So here, Mega has its own stablecoin called USDM, which is being handled by Ethena. If you know Ethena are the issuers of USDE, a synthetic dollar. Megaavethena is the economic engine of MegaETH. I will explain you how. So, crypto users really like to loop their stablecoins to give more yields. So here users can deposit USDE from Ethereum, mint USDM, and use that to again loan as USD, and this cycle goes on. But what's the advantage by doing this in Mega is both USDM, Mega's USD stablecoin, and USDE, Ethena stablecoin, are being handled by Ethena themselves. So both side of the loop, Ethena profits. So they are okay with this. And in MegaETH, USDE gets a yield of 3% as it is, without any staking and all. Like they have provided a special yield pass over there. And USDM has a 3%. So people combine these both yields into a 6% product, and they are also looping their collateral over and over. So they are gaining 9 to 10% of stablecoin yields. So in such a
basically
fluid manner,
you have some interest coming out of your amount of portion of money.
Yeah.
And you're also using that to get a collateral.
Yeah. That collateral
that
has
also
its own yield.
So that also is kind of generating yield by itself.
Yes.
So your loan amount also is generating money, and your own money also is earning money.
Yes.
So your effective interest rate is quite high.
Yeah.
Okay.
So because of this condition, just now, like a day before, Mega breached the $500 million worth of value locked inside their chain.
Okay.
And this will keep on increasing because the whole system,
the compounding effect keeps running.
Yes,
right?
it's fully profitable and people won't stop. So this economic engines make sure that Mega gets like huge amounts of amount locked inside the ecosystems. Like $500 million worth of value invested into an L2 is a huge feat.
Right.
And this also looks very good on paper. So that's what I wanted to mention.
So that's what. So let's talk about this. Right? What is the big picture? Right? What is the big picture for us? What is the big picture for the bulls? And what is the big picture? What does it look like? You know, best case for bears from here.
Okay. So
like bull case
and bear case.
So how does it look for us from here, from this point?
So whatever we talked right now, let's segregate them into bull cases and bear cases. So we saw how KPI based system is being implemented. So if KPIs are honest, Flux works as designed, then vested supply can't dump, price will stabilize, real gaming app will ship, and everything happens in a smooth way. So this becomes a bull case. Second bull case scenario is, as we saw, MegaETH also has sub-second latency, like it's very fast chain. So if you see normal traditional finances, you know how big exchange houses co-host with their brokers and all for the advantage of latency, right? MegaETH has officially planned to sell it from their side itself, latency blocks.
Got it.
So
to make the speed faster.
Yeah. So the chain is already so fast. Latency arbitrage is a thing. It's a possible thing. So they have proximity markets.
Okay.
So this is a bull thing. If they get really good decks or prep decks where traders want to trade on, then proximity markets will have huge revenue for them. Ethena being in MegaETH and Aave also supplying those loans, as I said, this stablecoin loop will also rise their TVL on a very steady pace. This is a bull case scenario. But what would be bear case scenarios? If KPIs turn out to be gameable, which I negate, but still, if it turns out to be gameable, supply will start to flow into the system very fast, which should not happen. And if macro stays very brutal, like we are not in a bear market, but we are in a very stale market, even after war, you can see, right? So in that scenario, 2 billion is really good, but if it can't sustain above 1 billion till another bull arises, it hitting next price, the probability of Mega to hit higher prices will keep on lowering if it cannot sustain itself in the same FDV market size. So that's one bear case scenario. If gaming thesis never materializes, like if MegaETH either does not bring serious apps, or even if the games don't bring in serious users, because these games I have seen is very hyper gamblified, I think, like even if users come to use it, if users lose money faster than they will to get it, or
but the games are good crowd pullers. They get people.
Yeah, they are crowd pullers, but the crowd should also have spending capacity left.
Right.
If you take their money very fast, they would stop playing the game altogether, and
they would not even turn towards the console also.
Yes. Yeah. So then MegaETH will become a barren fast DeFi chain without any apps. So that's a bear case. So their current gaming thesis, they should get over it.
Got it. Okay, that was a very interesting cover up on MegaETH, which is a big news for this week. Also, we'll take our audience questions. If you guys have any questions for Vaishnav regarding MegaETH, please drop in a comment section. That's it for today. Meet all of you in next Block Talk. Please do share, like and subscribe.